Hi there, good afternoon. You're watching Market Fatafat on ET now. I am Snehi and with me on the show is my co-anchor Nupur, and this is a show where we are going to quickly, within a minute each, tell you some of the top buzzers, talk to you about some of the top buzzers in today's trade. Speaking of which, we've seen a very good recovery coming in from the day's low. We're now above the 24,350 mark. So looking good for the Nifty and absolutely flat over there. Nifty Bank has edged over to the green, as has been the case with the broader end of the market. So while the first half of Monday's trade was tepid, the second half is shaping up to be better, at least for now. We're shifting focus to the primary market then. Tempsens Instruments is set to launch its 650 crore rupee IPO and it's eyeing 2,515 crore rupees in terms of valuations. My colleague Sajid spoke with Mr. Vinay Rathi, the MD, and Aryan Rathi, lead global sales of Tempsens Instruments, to understand the roadmap ahead. Here's a snippet of that chat.
We operate in the thermal and cable domain. So what we mean with thermal is temperature sensing, electrical heating, and specialized cable. And we are working with all kind of industrial environment, be it steel, cement, power, petrochemical, glass, plastics, nuclear, space. So what the company does is, it is a part of the automation system. So we use temperature, like the industry uses temperature sensors, which would sense the temperature of the process and give the output to the automation system, which would then be firing or cooling down the heating cooling process. So these electrical heaters are used whenever you want to have a precise temperature control. So like, for example, a power plant, you would sense the boiler temperature and then would lower or increase the steam temperature. So that is where it is a very critical part of the process. What it helps, like these sensors or these heaters or even these specialized cable do is they are controlling the process, and what it is important is for the efficiency of the process, or could be for the safety reasons, or could be for the product quality. So that is why it is very critical. So the company is operating in India and worldwide. So we are working with almost 80 countries, with 5 our offices and also small assembly plants worldwide other than India. And the growth of the company has been pretty good in the last years, and we see that it would be growing in the future. Mostly we have been working with the heavy industrial segments, but now like catering to a lot of OEM customers also.
Aryan, give us a sense of the proceeds that you're going to use. You're raising 95 crores in fresh equity. Where is it going to be used for?
Right, so we're raising 95. Out of that, a bulk of that will be helping us repay the debts down, and some part of the issue is also being used for capital expenditure to expand our capacities across electrical heating solutions as well as specialized cables. Then the OFS is done. The executive family, the Rathi family, we are not selling any shares there. Although FS is by other shareholders that are non-executive in the company.
Vinay, give us a sense of the kind of debt that you have on your books and how much of debt will come down. And in your operations, I can see that working capital is a larger component. So how are you managing that?
So debt, the company is a kind of net debt free. So the debt what is there is for the working capital. So that is what is going to be reduced. The working capital cycle is mainly because of the backward integration and the project business that we do. So this is about 120, 130 days. So which is normal with the kind of engineering and the EPC kind of projects that we are doing.
So to add on to that, on the backward integration side, that of course has some working capital that it increases, but it helps us give customized and made-to-order solutions to our customers. So most of our products are customized according to each customer specification. A product that goes in the nuclear industry is very different than what you use in a cement industry. That gives us a competitive advantage as well over our competitors that do not have these kind of facilities that help them customize these kind of products.
Okay. Can you also give us a sense of that trade receivables that you have? the number of trade receivable days is around 70 odd. Is that the normal in your industry, or because it's gone up from 60 odd to 70 over the last 3 years?
So as we are doing the project business, so it is normal that 60 to 70 days receivables are the normal course in these kind of project business, be it petrochemical, because what we are working is with also the engineering EPC players and also end users. So this is typically the working day cycle for these kind of markets that we operate in. But these are very secured kind of customers, very large customers, so there's no problem of the payment. It's the only thing is that's the normal course with these kind of project business.
With a sense of the kind of cost escalation that you have seen in Q1, given the fact we have West Asia crisis, cost of raw materials have gone up across the board. What kind of impact would have happened? Are you hedged for that kind of cost? What kind of imports, dependence you have?
So a few of our raw materials also imported, but what happens like the cost is all figured in the offering to the customer. So our order book is mostly order book business. So the costs are normally built in in the prices. So normally it's a cost plus basis for most of our products, which are the standard engineering products. So the cost is already built up in the kind of products that we do. So everything is make to order. So like the customer has a specific requirement, and that requirement is fulfilled. Like we are in two kind of businesses. One is a project business, and second is a MRO business. The project business, the typical cycle is maybe 14 to 16 weeks, and for the MRO business, it is about 4 to 8 weeks. So the cost is already built up in the orders, and there's the most of the price fluctuation is already built up. So there's nothing that the company foresees that a big impact would be there on the companies working for these kind of orders.
So that was the word that we were getting in from Tempsens as they enter the primary markets. We slip in a very short break here, but we will be right here in the studio. So do join us back as we look at. Welcome back. You're watching Stocks Fatafat on ET Now, and we are taking you through the stocks that are buzzing in trade today. Joining us on the broadcast is also Kunal Parar. He's the Vice President and Technical Research and Algo Choice Equity Broking. Hi Kunal, thank you very much for being with us. So Kunal, we're going to come to you in just a bit with the stocks that you've picked, but let's begin with one that's been buzzing in trade today, and that's Zaggle. The stock of Zaggle Prepaid has hit lower circuit of 20% after the company reported a very weak set of Q1 earnings, with the PAT falling below 33% YOY and margins compressing. Now the key drag was a DICE acquisition, integration costs, higher employee and operating expenses, and increased depreciation. The stock, of course, hit the 20% lower circuit at 160.48 rupees per share. On the NSE, it's fresh 52-week low following the company's weak June quarter earnings. Zaggle, of course, has attributed the margin compression to several one-time factors, including expenses related to DICE acquisition. So, Kunal, I think you've picked out Kotak Bank. So tell us why, according to you, it's in news.
Well, first of all, good afternoon to both of you. If you talk about Kotak Bank, right now trading at 395, stock looks very attractive on its daily chart. Stock is trading over 20 plus 50 days moving average. Not only this, if you talk about technical chart pattern wise, the stock has been trading its symmetrical triangle formation. So all the equation goes in favor of creating a long position only. Right now, stock is trading at 395. If you talk about support wise, then downside strong support comes at 385. And if you talk about target wise, first target comes at 403. And if stock gives breakout of this level, then further upside would be there even up to the level of 415. So amongst other private bank, I think Kotak Bank looks very attractive on daily and hourly chart.
Okay, that's the view coming in on Kotak Mahindra Bank on the charts. Kunal, thanks for that view. Shifting focus, let's talk about another stock that's giving a very big breakout on the charts today, and that's UFlex. On the consolidated year-on-year basis, Very strong set of numbers coming in from UFlex. In fact, it continues to be locked in 20% upper circuit. The revenue has come in at 5,366 crore rupees compared to just 3,900 crores this time last year, a very healthy uptick of 38%. The EBITDA has almost doubled, to be very precise. It's a 94% jump coming in over there at 888 crore rupees compared to 457 crores. The net profit is up almost 7 times on a year-on-year basis, and this was purely driven by strong top-line growth. No exceptional items aiding or favoring the numbers this time. 422 crore rupees is where the profit is compared to just 62 crore rupees this time last year, and the steady operating performance has also rubbed off on the EBITDA margin at 16.6% compared to 11.7%. All in all, very good set of numbers coming in from UFlex. The stock continues to be locked in upper circuit of 20%. We're shifting focus then. HAL or HAL is the stock that you've picked out for us, Kunal. On the charts, the stock in the last 6 months itself is up 20%. In the last 1 month to another 13% uptick is what we've seen. Are you seeing this up move continue on the charts?
Yes, definitely. The way stock is trading on its daily chart, I think this uptick may continue further towards the northward direction. Right now, trading at 5,088 level. Stock has already going to break out of its downward falling trend line on its daily chart. Not only this, stock is trading at its 52-week high with good volume and positive rhythm. So further upside will be there. And if we add something more, then on an early chart, stock has going to break out of its flat formation as well. So all the equation goes in favor for creating a long position only. The way stock is trading in on its daily chart, I think we may see some further upside momentum up to the level of 5,180, and if stock break this level, then further march toward the level of 5,670 would be there. So yeah, definitely stock looks very attractive at present level. One can get into the stock with strict stop loss of 4,920.
All right, moving on to another one that we've picked out. It's Schneider Electric. It too under immense pressure today after the company's Q1 profit actually plunged about 70% YOY to 12.4 crore rupees. Now, despite this is despite the revenue rising close to 5% YOY. Now, the key drag was commodity cost volatility and delayed pass-through of higher input costs on legacy orders. Now, the management in its con call has emphasized that profitability was impacted by negative operating leverage and higher employee and other costs, and that they expect the margins to normalize through FY27. Going back to Kunal now. Kunal, I think you've picked out HDFC Life. What's your sense on that one? Pretty flat, not really flat, but pretty range bound today.
Yes, definitely. Since last 9 days, stock has been trading between the range of 530 to 545. And one thing is look very attractive on its monthly and weekly chart is that stock has recently taken the strong support of 530 level. The level, which proved strong even earlier during the 2024, and afterwards stock even went up to the level of 160 level. So we can expect some kind of replicate momentum at present level as well. Kind of stock is trading at 543. Stock support comes at 530, but for safer side, we will keep 520 as our strict stop loss. And if you talk about target wise, first target comes at 590, and if stock break this level, then 635 would be there. And yes, this stock looks very attractive even for portfolio creation as well.
Okay, that's your take on HDFC Life. Shifting focus then, let's talk about Bellrise Industries. That stock is heavily under pressure on the back of its Q1 results, and there was a miss on EBITDA and margins while top line was broadly in line. The stock is low by about 8.5% as we speak. The revenue grew 12.5% year on year to 2,546 crore rupees, while EBITDA rose just 4.3% to 293 crores. The margins also contracted to 11.5% from 12.4%. And if you talk about the bottom line, that increased 9% to almost 122 crores. But there was a 40% year-on-year jump in employee costs that weighed on profitability this time around. The company's key growth levers remain deeper penetration in the two-wheeler segment, premium products, expansion into four-wheelers and commercial vehicles, and transitioning from component to system supplier. But on the back of that employee cost jump, a 40% hike over there, you've seen massive pressure on the stock, 8.25%. That's the kind of knock that that we're seeing on Bellrise today. We're shifting focus then. TVS Motor is also another stock that we are tracking on the charts, and Kunal has picked out this one for us. Kunal, in the last 1 month itself, that stock has gone from 3,600 rupees to 4,300 rupees where it is right now. A very solid gain of 20% in the last 30 days. What's next for the stock on the charts?
The stock looks very attractive on its daily chart. Not only this, we have seen very good number from the TVS Motor for this July month in terms of ICE and in terms of EV as well, and also in terms of export levels as well. So all the fundamental figures goes in favor for TVS Motors only. And that is with our technical chart. Stock has been trading in uncharted territory with good volume activity as well. And the stock is trading about 20 plus, 50 plus, 100 days moving average as well. So long-term trend looks very attractive at present level. Right now, stock is trading at 4,366. One can definitely play with this game for with this stock for a bounce back momentum only. One can place SL at 4,290. If it's about target wise, first target comes at 4,475, and if stock break this year, then further march would be there even up to the level of 4,600. So among the other two-wheeler counters, I think TVS model looks very attractive at present level with fixed stop loss of 4,290.
All right, shifting focus from autos now to EdTech, and PhysicsWallah is a top gainer on the markets as the EdTech company comes out with a strong Q1 print. Now, its revenue has soared to 24%. Losses have also narrowed to 88 crore rupees compared with a loss of 120.5 crore YOY. Now, shares of that EdTech major actually gained as much as 9% in the morning deals. Right now, also about 6% up. It has corrected a bit from the day's highs now. JM Financial, in the meanwhile, has upgraded PhysicsWallah to a buy from add after the Q1 results. The brokerage said that Q1 was a decent quarter for the firm despite neat disruptions, adding that the underlying business fundamentals do remain intact. And going back to Kunal now, and he's picked out Jindal Steel. Kunal, what is that stock looking like for you?
Well, from other meta counters, I think Jindal looks very attractive on its daily chart. Right now, trading at 1108 level. Not only this, on an hourly chart, on a weekly chart, monthly chart, stock has been trading very strong upward edging trend line, and the stock is trading over 20 days moving average also. So technical chart looks very attractive at present level, and recently stock has taken the support of it's a 1000 level, which proved as a strong support as well earlier, and afterwards it even went up to the level of 1270. So same replicate momentum we can expect from the present level. Stock looks very attractive after analyzing all the technical structure. One can keep SL at 1080. Right now, stock trading is 1108 level. If we talk about target wise, first target comes at 1130, and if stock break this level, then smart move would be there even up to the level of 1200. So among the other meta counters, I think Jindal still looks very attractive on its reset in terms of this pivot as well.
Okay, that's the take on Jindal Steel. Let's shift focus and talk about SEM India projects, earlier known as ITD Cementation. This stock is in focus on the back of brokerage action today. 4% uptick on SEM India on the back of a note from ICICI Securities, wherein they've initiated coverage on the stock with a buy rating and a target price of 1,550 rupees per share, indicating an upside potential of 19% from where the stock is right now. They expect a 27% earnings CAGR through FY29, and the company benefits from strong Adani Group synergies, with group orders accounting for 53% of the order book and a first right of refusal in group opportunities. Its 3.1 times book-to-bill and 1 trillion rupees tender pipeline provides strong growth visibility, led by marine, metro, railways and hydro projects. Data centers, pump storage, the Navi Mumbai Airport and Bangalore Ring Road tunnels are emerging as key future growth catalysts for the company, is what ICICI Securities is flagging off and liking it. On the back of all of these factors, they're bullish on the stock. Positive initiation note coming in from ICICI Securities on SEM India. That stock is up 4%. Shifting focus then, Muthoot Finance is a stock that we want to look at on the charts, Kunal. In the last 1 year, or in fact even year to date, this stock has given only negative returns. It's 25% down year to date. What's the outlook ahead? Would it be a good time to buy, and are you seeing a reversal in this trend now?
Well, bounce back would be there after analyzing the technical chart, I think we can say. Because stock is trading at 2910 level, and the stock has a strong support at 2830 even earlier. Twice the stock took the support of the 7, and afterward even it went up to level of 3200 to 3600 level. Not only this, if we talk about weekly and monthly chart as well, then it is giving some kind of confidence and conviction as well for this counter, because the way stock is trading with a strong support 2800, I think a good March would be headed toward an outward direction. Right now, stock is trading at 2900. One can get into the stock at present level with fixed stop loss of 2800. If we talk about target wise, first target comes at 3140, and if stock breaks this level, then further upside would be there even up to the level of 3500. So yeah, in terms of risk reward, Muthoot Finance looks very attractive and aggressive among other NBFC counters.
All right. The next stock that we've picked out is IPCA Labs. It's seeing a healthy gain on it as it is doing well after the company upgraded its FY27 revenue growth guidance to 14 to 16% and EBITDA margin guidance to 23%, reflecting strong business momentum. Now, exports have surged 34% led by Europe, while API revenue has grown about 30%, adding further confidence to the growth outlook. Now, IPCA, of course, had surged about 11% to 1,917. Currently, of course, a tad bit down, but still up to about 9% on the stocks, trading at 188, 888 at this point in time. Now, what we have seen is that this stock has reacted despite the subdued market that we see around it, and this did almost hit its 52-week high of 1,941 that it had earlier touched on the 17th of July.
Okay, with that, let's refocus. Talk about Saatvik Green Energy. Quarter-one performance was very weak, with revenue falling 44% to 511 crores. EBITDA plunged 81 crores as well, and that has put some immense pressure on the margins at 6.6% compared to 19% this time last year. The adjusted bottom line also declined 95% to just 6 crore rupees, impacted by lower volumes, pricing pressure, input costs, and ALMM-related procurement delays. The order book remains strong at 6.35 gigawatt, worth 8,200 crore rupees, providing 12 to 18 months of execution visibility, and the management has maintained their FY27 guidance of 3.5 to 4 gigawatt sales, 6,000 crore top line, and 12% EBITDA margin despite higher capex and debt requirements. Despite this positive commentary, the stock is low by 6% as we speak. With that, I'm afraid we're completely timed out on this edition of Market Fatafat. Kunal, thank you so much for joining us on the technicals. But with that, it's a goodbye from Nupur, me and the team that put this show together. Thanks so much for tuning in, but keep watching ET now, because closing trades will take you through the last leg of the trading day.